Welcome back, friends. So we see the U.S. markets, the Dow Jones, S&P, Nasdaq, all at all-time highs, and there is been a great run that's happened over the last few months from November 2023. The markets are right now going up on the expectation that the U.S. Federal Reserve will be cutting interest rates very soon, and in fact, many have factored in as many as 6 rate cuts to come in 2024. The many expectations of many have, however, been whittled down over the last few days, that instead of 6, there may be something like 3. Yet, that is something which is quite a substantial number, considering that the economy still holds pretty strong. Another factor that could come and could spoil or could spook the markets is the possibility of the policies that the new president can adopt once he is in the driver's seat. Right now, Donald Trump looks to be in the forefront. We have the primaries in New Hampshire today, and there is every possibility that Trump may again come out or emerge victorious here as well. Even if Nikki Haley does not drop out, yet Donald Trump does have a substantial lead, and we should be seeing another Trump versus Biden combat come November of 2024. However, if you go and look back at the former president's policies, in 2017, Donald Trump had cut the top corporate tax rate from 35% to 21%. And on this campaign trail, he has vowed to further lower it down to 15% if he's elected for a second term. Now, the market looks to be very complacent about the risks that could be associated with a Trump win, because he keeps talking about fiscal expansion, tax cuts, defense budgets, and so on and so forth. So there could be what I would say a tantrum that could be associated in the long duration bond markets, and Wall Street has enjoyed a pretty remarkable rally since December of last year, but as I just explained, the focus has remained on the Fed Reserve cutting interest rates, but not as much on the possibilities of the expansionary fiscal policies that Donald Trump may come should he be elected president for the second term, which looks to be a likely possibility at this point of time. Bullishness in the risk assets is driven largely by the consensus that the Fed will begin cutting interest rates rapidly in the early part of the year itself. March looks to be what most people seem to be thinking about, and that a US economy will manage a soft landing. Okay, that is bringing inflation back to the Fed's 2% target without triggering a recession. And that many also believe that one could look through a fiscal and a geopolitical lens to the November's US presidential election. As you know, the markets start factoring in these factors much ahead of time. If that were to happen, then, as I explained to you, that the optimism that the markets seem to be sharing and seem to be taking it to all-time highs can dwindle quite fast, and that can lead to a good sell-off in the equity markets across the world, beginning with the United States, of course. Okay, so a Trump presidency could be positive for the economy in the sense that there would be probably be more fiscal stimulus to state tax cuts. Okay, but what it does to the bond market, and what about the economy? If the economy is still strong at this point of time, which it seems to be, all the figures seem to be still pointing towards, even the housing data now, which the housing prices were going down, but if you look at the Case-Shiller index, that again seems to be sign of housing prices stabilizing and going up. Then the market would really not require a fiscal stimulus. But since Donald Trump has promised about a fiscal stimulus, should he be elected as a president, the bond market can start getting rather nervous about debt sustainability and higher interest rates. and therefore we could see higher bond yields, a bit of duration tantrum, and risky assets like the equity markets can go in a good downhill. So, friends, that looks to be a scenario that the markets need to factor in. And why don't you be a part of our Prime or Prime Plus Telegram groups? We'll tell you exactly what is the point of time when this tantrum, bond market tantrum, can come and spook the markets. And once you have that roadmap, it's like a navy in your car, much ahead of time. You'll be able to navigate more smoothly, and you will have a competitive advantage over others in terms of your investments. So leave it to us. Let us do all the hard work for you. You enjoy the ride. We give you the navigator, and we help you navigate through the treacherous stock markets. It's going to be very different as we go forward from here. What you're seeing November to January is going to be very different as we go forward, friends. You will see strong rises upwards as well. Even more highs, but you'll see some very, very sharp knocks that can come and rattle you. So to join our Prime or Prime Plus groups, which are focused on the US markets, please do WhatsApp us on 982-086-1044. Happy investing and have a great day ahead. Take care. Bye-bye.